Let's take a look at the markets. Again, we're kind of picking up, trying to take back, if you like, everything that was lost at the Friday, the last session of last week. China's embassy, by the way, just posted this on X. It says, quote, China will do what is necessary to protect its legitimate rights and interests. China also says threatening high tariffs is not the right way to deal with China. Jeff Sica joins me now. Jeff, okay, the president over the weekend had a kinder tone towards China. He said, we'll get it done. I like Xi. He's a great leader. He's very smart. Markets seem to be responding to that. But again, that could change with another headline tomorrow.
Very true, Ashley. And keep in mind, you know, this back and forth with China, we don't know what we can trust from President Xi. Yeah. We don't know whether he's going to stick to his commitment. If I were a betting man, I would bet he's not going to. Yeah. So I think the market, I mean, when you're thinking about why the market collapsed on Friday, it was because of concerns over the potential trade war with China, the continuing trade war with China. What I see is that we're going to win this trade war. It's going to happen. This mutually assured destruction is going to cause both sides to compromise. But I think there are ominous factors hanging over the market. For example, I think AI, and I was an early adopter in AI back to 2018 when I said to buy NVIDIA when it was $3. But right now, I'm seeing that AI has, as great as it is, has become so overpriced.
It's a bubble.
I quote this MIT study that 95% of AI companies generate no revenue. And that there are going to be companies
that are valued so highly.
They're valued highly, and the market is dependent on that. So I would say China will get resolved, but we have other issues. The credit markets can't even get into that now, but the credit markets have issues as well.
Very quickly, gold. Bitcoin kind of sold off a bit over the weekend, coming back now. But what about gold? Look at gold. It's up $113, $4,100.
Well, I mean, I like
it. Is it too expensive to get in at this level?
No, and I think here's what's happening. You have all these countries, these central banks that are buying as much physical gold as possible. I think gold, I had a $5,000 target. I'm keeping the 5,000 an ounce target, but I think it could exceed that because the demand has never been higher. Bitcoin, on the other hand, I was also an early adopter and bet Bitcoin, but Bitcoin collapsed this weekend with the littlest tremor in the trade deal with China. It collapsed it. Here's what I see with Bitcoin: way too much leverage, way too much leverage, and it's gonna unwind.
We hear you loud and clear, Jeff Sica. Great stuff. Thank you very much, Jeff.